of the things that makes me nervous about central bankers trying to stir the pot effectively when it comes to the economy, one of the things that makes me nervous is that typically they get it wrong. Right, Steve Cortes? I mean, they are either too early or too late.
Right.
They very rarely get the timing on this stuff right. So,
you can almost...
you know, go ahead, but this is my concern, because I don't know whether she thinks that anything's going to come out of the fiscal policy in Washington or not.
Right.
But if she, you know, how do you factor all this in, knowing that historically they're just wrong?
Right. You know, I'll tell you, as a guy who works as a market strategist, if I had a forecasting record like the Fed's, I would have been fired a very long time ago. But government workers don't tend to get fired, unfortunately. I would say this. They don't, most of these central bankers, and around the world for that matter, but particularly for our Fed, these are academics. This is an MIT cabal. These aren't people that live in the real world. These aren't actual bankers. They're central bankers. They've never lent money. They haven't managed an investment portfolio.
Really good educations.
They haven't paid, made a payroll. So I think they don't understand the world terribly well. I think they live in an academic, liberal, generally liberally leaning bubble, and so that's one of the reasons why they can't forecast well what's going on out there in the economy. What I will tell you is this.
Because, by the way, Steve, let me just jump in and say, I think 2% is actually very modest.
Yes.
I think that if Trump is successful on the health care front and on taxes, you're going to see a whole lot better than 2%.
I agree. We're going to get much higher than that, exactly as you're talking about, because of the policy. You know, the American economy is like a runner that has been running wearing a weighted vest, and that vest is imposed by this city I'm in right now, Washington, D.C., via taxes and regulation. We are taking that vest off so that that runner can start to sprint again, as the economy should in this country. When we remove the regulatory hurdles, the tax albatross that is just that squeezes our economy to death, when we remove those hindrances, I think we're going to see our economy
Adam's been crunching some numbers on this, and you've been looking at S&P earnings, and your feeling is earnings could actually go through the roof once you start to get rid of some of these taxes that companies have been burdened with.
Correct. So for the past 3 years, we've just been sort of stuck in no man's land, at least on corporate earnings. S&P 500, $118, 3 years in a row. Finally this year, as things are percolating, the estimates are for about 128. And by the way,
is that because companies are growing sales, or is it because they're becoming more efficient?
Yes. Actually, no. The efficiency thing was a couple of years ago. We've actually gone past that. Now it's not just increasing your margins by lowering costs. Now it's actually growing the top line, because the global economy is starting to percolate.
Right. And so this is important. This is real growth, fundamental growth that we've been missing.
Correct. And the reform that you and Steve are talking about is in addition to that. So not only do you get earnings going from 118 to 128 this year, you actually get legitimate reform. You could get them to 135, 140. That's the excitement. When people talk about animal spirits, that's what they're talking about.
All right, animal spirits, we're certainly seeing them there at the New York Stock Exchange. As we watch market right now, that's up 86 points. Lori Rothman, what are the traders telling you in terms of whether or not this is good and whether or not Trump's policies are good?
Yeah, they're optimistic about Trump's policies, that's for sure. Let's get past the health care hurdle, then it's all about tax reform, right? Worth a mention that the Dow, actually, it's popped back up to a 92-point gain since we got the decision. I took a moment while y'all were chatting to take a look at the Fed Funds futures for the duration of the year. So the May percentage that we will see a hike is up to 87.5%. June, now that's the next press conference meeting, that's 37.6%. Another market reaction I found interesting was the 10-year yields and the 30-year yields, for that matter, came to 1 week lows here after the decision. So you're looking at the benchmark 10-year yield at 2.526. So bonds are rallying here. Back to you.
All right. What do you make of that, Adam?
That is because the specs have been so short. Rarely do you see a situation where real money longs, you know, the asset managers, have to deploy capital, and they're exceedingly long, versus the speculative traders, short-term guys, are exceedingly short. You have to go back about 5 years where you see them totally or perfectly paired off. Well, right now, guess what? The shorts are getting squeezed, all right, because people are deploying capital. They're putting money to the work. They feel good about this economy. They're putting capital out there, which means the shorts are getting squeezed. That's why you have the 10-year down, even as the Fed's raising rates. 10-year yield, that is.
Yeah, good stuff. Yeah. So Janet Yellen, she's about to speak again within the next 15 minutes. Kimberly, as an investor, what do you want to hear? What are you listening for?
I'm looking for her to just be able to be constant and be stable about the rate increases, that there's no other hidden agenda there, that they may tighten more in the way of maybe refunding on the balance sheets, something in that regard, something that would maybe upset the market. So as long as we're constant and we're increasing them in, say, in June and in September again, this is going to be good for the market. It's going to be good for the little man out there, too, for the small investor. Just like the gentleman was saying, I see that every day, Trish. My clients that have small businesses, they're very euphoric in a way about this growth. And I think that change is there's some sense of trust that what is coming out of Washington is actually going to be put into fruition, and that is going to have fundamental growth. When we have fundamental growth, the economy grows, earnings grow, and that means that stocks grow. That means investors' portfolios grow, their 401ks, and everything is good. And isn't that what we want? We want to create wealth in this country, right?
Well, this is what bugs me, Kimberly, about Washington, right? And folks like Nancy Pelosi being so resistant to any kind of economic policy change that would be meaningful for those small folks out there, small business owners, small investors. I mean, business at the end of the day is what keeps everyone employed. It's not government, as much as Nancy Pelosi would like you to think. And Steve, it's just important that we as a country start to shift our mindset so we're not, freaking out about, the possibility that government might get smaller when it should be business that gets bigger.
Yeah, amen, Trish, to all that. I'm here in Washington at the U.S. Hispanic Chamber of Commerce Washington Summit, and this is a group which, by and large, opposed Donald Trump. They endorsed Hillary Clinton and were very active in the campaign in some ways against Trump. Having said that, at the conference today, talking to individuals, most of them small business owners, the excitement is palpable about what is now possible with this administration. And even people who politically don't like Donald Trump economically realize...
I hear that. I see it in New York all the time. I mean, New York is a place where, let's just say, it's not terribly friendly on the streets of Manhattan to our new president, even though he's from here. But yet, you talk to people on Wall Street, Adam, and they'll say, well, maybe I don't like him, but I love his policies. And that's important because it shows you that they're trusting. While they have their, their trepidations about him in other areas, they really feel that he understands business in a way that we have not seen in Washington.
Well, I have two comments there. Finally, yes, we have a businessman, business person in the White House. And number two, thank God Hillary Clinton is not president. Because you know what? We would right now be sitting in on Elizabeth Warren would be sitting up on the dais in Washington, and we'd all be talking about how she's crushing the banks and how we're ever going to get a loan. Thank God.
I know that Steve Cortes wants to say amen to that, but I'm sure that there are some bankers there that also are probably saying amen to that, especially as they finally watch their stock prices increase because there's no longer that threat of, as you said, Elizabeth Warren coming down on them. The one thing that people sometimes forget is that as much as you want to demonize the banks, you need a bank to get a loan, and you want them out there lending to people because that's part of what has this whole economy ticking.